An early Christmas present for both realtors and prospective homeowners or those who are moving up. I'm Andy Gastmeyer with that story coming up.
And we'll write the final chapter to the latest background report, the good news, bad news on the housing market.
If you're looking to sell a house or you're a builder, these are tough times. But if you're a buyer with the money, there's some relief in sight for you in the form of lower mortgage rates. As Andy Gastmeyer reports, the new rates could bring some new interest to the markets.
It's a Christmas present to the people of Pittsburgh.
What Mike Suley, president of the Greater Pittsburgh Board of Realtors, refers to as the tumble mortgage interest rates have taken in the past several days. Look at, say, a $75,000 mortgage at 30 years, and you can understand the reason for renewed optimism. At 9.5%, the common going rate of late, the monthly payment is almost $631. But at 9%, which many lenders are now offering, the payment drops down to $603.46 a month, a savings of over $27, and nearly $10,000 over the life of the loan.
The rates moving down will trigger people reacting. Even though it's December, which is traditionally a slow time of year, rates at 9%, even if you want to call it a recession, will trigger a response.
That kind of optimism is based on the fact that 60% of the homes in the Pittsburgh market are selling for under $60,000, meaning at prices within reach of many of those on the outside looking in. But there are also a lot of houses, existing houses that is, that might sell for anywhere from $75,000 to $100,000. And that is a segment of the market that has great potential for turnover, simply because they're not building many new homes in that price category.
We have affordable housing and low interest rates, so that could make us somewhat recession-proof.
Such speculation is something Pam Frank, Pittsburgh National Bank's mortgage department manager, tries to avoid. But about this, she has no doubts.
As the rates come down, that does increase affordability.
And while on the surface a drop of a quarter or even half a percentage point might not seem like much in terms of selling the American dream, it's a lot to those who don't have a lot of money saved up for it.
People that 1/8%, 1/4% could make or break their ratios so that they could afford a home. It's definitely going to help those types of people.
Even allowing for the fact that the lower rates are often accompanied by 3 or more points, which on our $75,000 mortgage would cost the home buyer an additional $2,250, that's not viewed as a deterrent because they can often be negotiated. The bottom line here is that at a time of year when the housing industry is traditionally struggling to move its existing inventory, there comes a chance to make a killing that otherwise wouldn't exist were it not for the drop in interest rates. But the big question now is how many who have been putting it off might be willing to make the move. Andy Gastmeyer, Channel 11 News.
Also, within the past 24